Hi, it's Graham Bibby here, and it's the 6th of January in 2017. So we're virtually through the first week, and I'm so excited about this year. I've written a book, I've done a lot of research, an ebook called Trumped, the ultimate art of the deal, which is what him becoming president is. But new mega trends are going to be set off because for the first time in 8 years, we're not just manufacturing money that's really not going anywhere but creating more money, and money going to banks and financial institutions that are not really lending it out for productivity. It's just going into paper assets, which are making more paper assets. We're actually going to get some physical things done, especially through the infrastructure. So what I wanted to do today was take you through the holdings that are held in various insider club services. And some of you have said you didn't realize there was various services. So there's undervalued with superior earnings service. So that's companies that are growing faster than the average company in the US. Most companies' forward earnings growth in the US is 10% per annum, and most of my companies are growing at least 20% per annum. The PE ratios of most companies in the US are about 16, so it's a 1.6 multiple of the growth rate, and I'm looking at companies where the multiple is less than 1.2, hopefully 1, in some instances even 0.9. So the price you're paying for the growth is a discount. So you've got superior earnings and they're undervalued, but we need to get an uptrend. And then we've got ETFs, which are exchange traded funds. These are funds listed on the stock market, and they can be a country like Thailand, Australia. They can be a sector like gold, could be banking stocks, could be retail stocks. So it gives you the world of opportunity. And then there's special situations, which are stocks that don't fit undervalued superior earnings. It can be turnaround situations from resources and commodities, which are still beaten up. Had a great run at the beginning of last year, then got a bit hammered. So people who came in late actually lost money on that deal, but the ones who came in early still made a handsome profit, and I believe we're going to have another leg. And then we have the mirroring account, which is the jazzed up account, which mirrors what I'm doing, and that is a lot more volatile, but I'm looking at 100% per annum over time, but you can get corrections of 30%, which we saw from the second half of last year. So that's those services. And then we've got the property deals, which are undervalued, and right now I've got some great deals on Kangaroo Island. We were buying the properties, we're buying ocean front properties from $22,000, which we're selling for $45, $47 8 years ago. And up on the penny shore, we're buying stuff that was selling for $157 8 years ago for $80, because in Western Australia, not to be associated with South Australia, the resources crash has caused mayhem in the property market, and a developer there is in financial strife. So we're picking up bargains in an area that's set to boom. So anyway, let me take you through some of the holdings we got in the various services. And the first stock I've got here is Uranium Energy Corporation, UEC. You know, we bought it before, we've been in and out of it before. It's having a terrific run right now, because just here towards the end of December it was trading below $1, and currently it's $1.39, so it's up 39%. And if you don't have it in your portfolio, it's because you're not in that service, because we don't commingle services. So just flick me an email if you're interested in knowing how you get involved in that sort of thing. I just want to show you here, this is the ETF to do with uranium, and again it looks like it's bottomed out. We had a bit of a correction here in December, but strong movement up. All the signs that this area is bottoming out, and if it does, these stocks are down somewhere in the region of 95%. So if we're into a new upcycle, that means what was 100 is 5, and the probability is it'll go from 5 to 100. So that's quite huge. Now these stocks here, I'm going to quickly flick through what's in my insiders club. So here we got Netflix, and you can see here brand new high recently, so that's looking great. In our ETF service, our FOS service, which is exchange traded funds, it's also available in one or two of our other services. We've got natural gas. It's been in this trading range. We thought we were breaking out and we pulled back, but okay, last night it was up 1.68. Then we got Facebook, and it got slammed here, really because of stuff posted on it during the election. But Facebook, if you've got a Facebook account, you know the number of adverts that are on there. You know the couple of people, not a couple, a lot of people promoting their services for driving traffic, for starting an Amazon business or whatever. So all those people pay to go on Facebook. So Facebook revenue is going to go through the roof. So we are still in Facebook. It had an okay night last night, 1.67, but I really expect this stock to pick up steam soon. Then we've got in our ETF service and special stitch, not in our undervalued superior earnings, we've got Direxin real estate, 3 times leverage, which is at a new high here, DRN. It's coming off this base. Even that base was nearly 50% down from August. So we're buying 50% below what we could have bought last August. We're in a brand new uptrend. It's real estate, and Mr. Trump is involved in real estate. He's going to be involved in infrastructure. He's going to be involved in raising inflation. So that should be good for this area. Now, another area flying high that we've got is the airline stocks, and this stock we've done very well out of over the years. One of my clients who invested 50 grand in Save a few years ago, we got stopped out as it corrected, and he lost 5 grand within days and thought I was a complete idiot. And then we had a new uptrend start, and we reinvested, and his 50 grand made 45 grand in a few months. So yes, we can get hit with negative trends, and they can persist, but when we get these movements like this one, this stock went from 42 in October to 60, which is, well, that's nearly 50%, not quite. We've had a bit of a pullback. It's looking okay. It's looking good. We've got this one, which is the energy area, is looking quite strong. It's been treading water since December, and sometimes you need that pause after it broke out of this sideways movement. So okay, not exceptional, but okay. Now Skyworks, bit disappointing because it is going sideways. It makes most of the Apple components, and if we just look at Apple, AAPL, just stick that in there. Apple looks like it's into an uptrend. That Apple looks much more. The chart looks much better than Skyworks, but Skyworks is normally a leveraged version of the return on Apple. So let's see. This one, AHGP, it's okay. It's going sideways. I think at some stage we might jettison this one because I don't see the upside of other stocks, but we're holding it there at the moment because it's not broken a stop loss. JetBlue, we've had a bit longer than Save in this move. It had a nice move up from November, from 18 to 22, which was okay, 20% move. We've consolidated sideways since December. The stop loss is just below 22 here. I'm expecting with these moving averages moving up, as they get nearer to the price, we get some upside movement. Here's Rex, which we've got in one of our services. It's had a bit of a pullback, but it's been quite strong, so quite happy to hold that. Anybody seen any kids playing electronic games? We've got Electronics Arts, it's one of the key ones, but again, it's been a bit stagnant. So sometimes we don't wait for stop losses. If we have opportunities elsewhere, we will be repositioning. But right now, we're still with that stock, and let's see if we can get some upward momentum. This is Nvidia Semiconductors. It's been quite good, this stock. It's corrected recently. It didn't have a good night last night, but I think the bottom's in here around 100, and if we can start gaining momentum here, we should see it attacking a new high. Soxal is the semiconductor ETF. That's a leveraged version. Semiconductors go into everything these days. We're right on the stop loss position of where we are now. So I really like to see that start to take off. This one was the treasuries, and treasuries fall. Treasuries fall when interest rates rise, and this is ultra short. So that means it makes money from treasuries falling, and it was doing quite well, but it's pulled back below our stop loss position last night. So we're going to be selling that and looking to redeploy the money somewhere else. This is TNA, which is smaller companies in the US, and they should really benefit by what's going on with Trump. It's been kind of going sideways in December. The stop loss is 100. We're above that at 103.79. But on a bit of a pause, but looking good. The moving averages are moving up. So I expect to see some upside on that soon. And the other one we've got is Gentherm, which broke out from this low, been in an uptrend. It was up yesterday over 4%, but it's down 4% today. So it's treading water, but these are moving up, so I expect that to move up as well. Now, what I want to point out here, because I'm not afraid to go back into areas that we've been in before. Now, this is the junior gold mining, which we got hit on. We made money here, but people who came into this service late in the day, all the experts were surprised at the severity of the pullback. Gold junior miners was 32, and look, in December we hadn't got out. Pulled back to around 4, 32 to 4. 85% decline in what most experts still say is a bull market. So we broke out here in February, got most of that rise, which is why we went up over 120% spread across the portfolio. But we're breaking out now, and there's a couple of buy recommendations going to come for special situations and mirroring account. Based on the breakout, but we're not buying this one because it's up 25% last night, and it can move up and down 25% just kind of in a heartbeat. So, what we're buying is a few stocks that look more or look less volatile. If I go here to gold and silver, we are looking to get into, if I can find it, silver Wheaton, which has got a bottom here. It looks like it looks more attractive. It's one of the best silver mining companies in the world. It was 32. We're buying in at 21, so that looks quite good. And the other one that we're buying, if I can see it, let's just pop it in here. If I can't see it there, this is to do with copper. We broke out of this, we had a pullback, we moved up, so we're buying this because we've got a stop loss here. So we're looking to add that to our mirroring account. So early days, early in 2017, my ebook should be finished soon, and all of my Insider Club members will get a copy of that, and I will be promoting it on Facebook and the like. My book, The Truth Behind the Investing Game, I believe all the finishing tweaks have happened to it, and it's going to the publishers. Not sure how long that takes. I hope it's not too long, but early, maybe next month, you'll get a copy of that. So this is Graham Bibby here. 14 minutes, because I've gone through a lot, saying enjoy the video. If you're not in spread of those services, let me know. And if you want to be buying some land 50% below value, where there's at least 100% from the original value upside, and you can buy plots from 22,000. We're not building, we just buy and hold and flip them in 2 or 3 years for 100% upside, we believe, from the original prices. So if we're buying 50% below, it could be 200-300% upside. And the ones that are 80,000 are the most magnificent views you can ever imagine. Send me an email and I will get back to you. So Graham Bibby saying, hope you've enjoyed the first week of 2007, and I look forward to many, many very good weeks coming this year. Bye-bye.